Well, howdy there, folks. Tim here, ready to dive into the wild world of insurance. Well, folks, let's get this out of the way. By accessing and using this content, you agree to our terms and acknowledge that this content is not a substitute for professional advice. This is for entertainment purposes only. Now, listen up, because here's a puzzle worth solving. Let's mosey on through your options one by one. Full coverage versus liability. So you're standing at the crossroads of insurance choices. Full coverage, well, it's like the whole shebang. You got liability for the other guy's misfortunes, and then you got your own back covered too. That's the comprehensive and collision stuff. It's like having your cake and eating it too. Now, when do you need the full coverage gig? Typically, it's for those shiny new rides and leased ones, or if you still owe money on your four-wheeled friend. But hold on to your hat. If your car's got a few more miles under its belt than a crossroad trucker, liability alone might be the way to go. You see, as cars age, their value drops quicker than a grease pig in a mudslide. So if the cost of coverage starts outweighing your car's worth, it's time to consider lightening your load and sticking to liability. And if you wreck that four-wheeled friend, the high mileage could reduce the value paid, meaning you paid a lot of money for the coverage that didn't pay off. High mileage cars. Now, partner, let's talk high mileage versus low mileage cars. Insurance folks do care about the make, model, and all that, but mileage, well, it ain't the main character, but it's playing a part in the story. High mileage might mean more wear and tear, which could nudge those insurance numbers a bit, but it ain't the star of the show. But how many miles you put on your car can be a factor. Reducing coverage on your aging car. Now, when do you reckon it's time to tame down your coverage? About when your car's rustier than a forgotten horseshoe. As them wheels roll on and time marches forth, you might consider loosening the reins on coverage. Around 8 to 10 years old, that's when the scales might tip in favor of keeping your hard-earned money instead of forking it over to the insurance folk. Getting the most for less. Ain't no secret, saving dough on insurance is like finding gold in a riverbed. First off, scout around like a prairie scout. Gather up quotes from different insurance wranglers and size them up side by side. See who's offering the best bang for your buck. Bundling. Now that's a trick worth its weight in a cowboy hat. Round up your home and auto insurance, and you might just lasso up a discount. But hold on to your Stetson, because them insurance bandits can be tricky. Some might flash them fancy discounts like a snake oil salesman at a fair, only to jack up your rates like a rowdy Bronco rider a year later. That's where the wisdom of shopping around shines. A saddlebag full of quotes keeps them rates honest, partner. And when's this gap insurance fellow worth it? Well, imagine this. You're driving a brand new rig off the lot, and bam, it lost value faster than a tumbleweed in a twister. If Lady Luck turns her back, and your rig ends up in pieces, regular insurance might leave you in a lurch, paying off a loan for your car you can't even drive. That's when gap insurance rides in like a trusty steed. It covers a gap between what your wagon's worth and what you owe. It's like a safety net for them financial acrobats. So there you have it, my trailblazing friends. Whether you're wrangling coverage or weighing the worth of gap insurance, keep your wits about you. Shop around, ask questions. Remember, insurance is like a wild horse. You gotta break it in to get the ride you want. Happy trails. And if you find this information helpful, please subscribe and give us a like. Thank you.